Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
How do you think about these expectations in terms of employment, inflation, and GDP?
Yeah, I think it's been a bit of a, what's the word I'm looking for? A bit of a change of perspective. But yeah, certainly we've had, for what it's worth, we've had a series of client meetings in the last couple of weeks, and the papers tend to get produced in advance, and our IC talked about them. And you genuinely found yourself in the meeting saying, I know that's what our pack says, but those 4 points at the top have changed now, that the events have overtaken us. So I think if you came into the year, many people were, as you say, Finn, were talking about rates coming down, a fairly benign stroke positive outlook, AI capex, big beautiful bill, these types of thing. I think now there's a significant recalibration of that. And then I suppose, I guess, as you say, we stepped into the last couple of weeks, and the initial idea was this will be a very short conflict, and you can look through the geopolitical risk. That view is evolving into one that this is going to be a bit more protracted. It's not going to be quite so simple to back away from this, and the effects are going to be more medium term or more lasting. And that is then feeding through into the data you've got on the slide there. So I think there needs to be some reflection that this isn't going to be a simple passing thing that you can just ignore and fade like many other geopolitical events. It's got the potential to be far more significant. And as I say, I think if I had to guess, I'd expect higher rates, higher inflation, higher unemployment looking forward to what you might have said 3 weeks ago.
And the Fed keeps speaking about fog and navigating through fog, and we have the literal fog of war, of course, which is now a fog in markets, a fog in war. You've been in the markets for 20 years, looking at different phases of uncertainty, including 2008, including COVID. How would you say this current uncertainty compares?
I'd say it's not at the extremes. I think when I think back to 2008, I think there was the potential for a huge rewiring of the financial system, and I think it's as I've grown up, as I've sort of got more experienced, age, whatever word you say, you get more mindful about differentiating between different types of growth, recession. And in reality, most types of recessionary environments you can look through, they tend to be cyclical. The ones that are really nasty are the sort of financial system rewiring of the world type crisis, credit crisis, whatever words you want to use, which we faced significantly in 2008. I don't feel that what we're looking at here. I know you see headlines saying, "Oh, it's like the GFC all over again." I don't quite buy that. I think that's different. That's not to say there aren't risks, but there are also things that could suggest that could be very positive from a nominal growth point of view. I have a very open mind on what the impact of AI is likely to be in the next decade, say. And it's not clear to me whether it's very inflationary or very deflationary. And so you have these quite significant competing factors, demographics not least. So to me, it feels like uncertainty is quite difficult. To take a view over the next 5-10 years is quite challenging. So you've got quite a lot of unknowns. But I think the near-term uncertainty is not as material as it has been in the past, certainly in terms of compared to the GFC, or potentially even the Euro crisis, actually, 2011, 2012.
Yeah, it's interesting because I see a bit of pattern recognition, not only around the GFC, but also around COVID. And maybe it's just the literal pattern recognition of cancelled flights, cancelled plans, uncertainty about end date, and maybe the sense of dealing with kind of uncharted waters, certainly around the Strait of Hormuz and its closure and its impact, as well as we had the rupture of international world order that we've been dealing with for the past year, as well as COVID. So there's been a lot to contend with for the average investor as we look forward. And just in terms of how this is reflecting in equities themselves. So we know that the equities were not impressed necessarily by this managing down of rate cut expectations. Equally, they have been reacting to the oil price falling, but it seems to have somewhat less of an effect today